This is the briefing for Friday, March 31st. There is some divergences within the markets that are giving me a little bit of pause, and I'll explain those in just a second. This is a weekly chart of the spiders, and I want to start with the longer term chart mainly because I think it gives us a little bit better picture of what's happening, especially with the divergences. Now, since it is a weekly chart, this is 1 week of trading, the week we just completed today. This is the previous week and then the previous week before that. Now, if you look at this move up, this is 3 weeks of trading here. Look what's happening with volume on the spiders. The volume is just absolutely collapsing. This is 52-week highs minus 52-week lows. It is improving. This is market breadth. It is improving. So while we have a 3 week uptrend in the spiders, we have volume that's decreasing with every day. And then we have 52-week highs minus 52-week lows that are improving, and market breadth is improving. The problem here is that while the market is strengthening from an internal perspective, it appears that the higher it goes, there are fewer and fewer buyers. That also leads me to believe then that there's just no selling pressure, at least at this point in time. And it may take a news event before we see that. Now, when I look at the market internals, I look at volume mostly, but I have to pay attention to what happens with market breadth and with other internal aspects that I monitor. This is the percent of stocks above on the NYSE above their 50-day moving average, and this is the percent of stocks above their 200-day moving average. Over the last 2 days, this has absolutely exploded higher. That shows that there is an overall bullish bias to the market, and it is improving with each day. I want to go to total volume now. This was March 17th option expiration day. That's typical for an option expiration day, that day and this day here. But if you look at total volume on the NYSE, the trend is down. Now, this is today's trading, and today is the end of the month and end of the quarter. So I think that there was some settling going into the close, because this was not like this until the close. And the same thing with the NASDAQ. But you can see the general trend in volume, total volume on the NASDAQ is declining, eliminating what happened in today's trading, being the end of the month and end of the quarter. So basically, this is very concerning to me in terms of the rally. Now, we are coming into an important key reference area in terms of the spiders in the 410 area and in the other indices as well. It is not positive to see volume declining as you come into a support or resistance area. With that said, I have to respect the fact that from an internal perspective, stocks are beginning to gain some strength. If volume had not been declining like it is, this I would then suggest is the beginning of a huge rally that will potentially test the all-time highs and take them out. But I am a little cautious of that for a couple reasons. One is you can see the rotational pattern the indices have been in, I should say the spiders have been in for quite some time, and we are now just approaching the upper resistance area in the 410 to 420 area. So that could suggest the potential to trade up to 420, but then we could see another rotation back to the downside, especially if volume doesn't pick up. Now, I want to move to the daily chart. This is a daily chart of the spiders, and you can see the same thing. The trend in volume is down. The trend in market breadth is up. The trend in 52-week highs minus 52-week lows is up. And we are right at this important 410 up to 420 area in terms of this rotational pattern that we've been seeing. So what happens from here is going to be extremely important. Now, whenever we have a divergence in the internals, especially with price, we don't know how it's going to get corrected, but typically price will correct to the internals. The issue here is that while volume is probably the most important internal, we do have every other indicator suggesting that there is a strengthening in this rally, except for what's happening with volume. So while volume gives me some concern, certainly this rally is healthy from an internal perspective, and we have the potential to break through 410 and test this upper extreme here in the 420 area. Looking at the NASDAQ in terms of the Qs, you can see basically the same situation is occurring here. You can see this rotational pattern that's occurred. You can see that we've traded through this 314 area and have traded through the 420 area. So it looks like the next upside resistance is going to come in right around 335 in the Qs. Once again, volume is absolutely collapsing. NASDAQ breadth is improving. And this is 52-week highs minus 52-week lows. It's the same as on the spiders. In terms of the Russell is lagging, as you can see from a price development perspective, but volume is collapsing. Russell breadth is improving, and 52-week highs minus 52-week lows are improving as well. So we are right at this 178 area, which is its upside resistance for this area of rotation. Next upside resistance, should we break out, is going to be at 190 in terms of the Russell or the IWM. So it's just very, very difficult to determine whether this rally in the indices is going to continue or whether it's going to fade out, mainly because of the lack of volume that's occurring. And with every day except for today, you can see we've had declining volume, which is just very difficult for a trend to continue if volume continues to decline. That means there are fewer and fewer buyers coming into the market, and they're buying fewer and fewer shares that are available in the market. So except for what happened here, what's going to be important for next week is if this starts to get resolved and we start to see a continued increase in volume, then I suspect that the market is in a fairly strong uptrend, and we just have to watch upside resistance areas. If we trade through and up to 410 to 420 area and the other upside resistance areas in the other indices, and volume does not improve, then I would suggest risk is to the downside and watch for the potential on short-term charts to begin trading through short-term support areas. That would give you an indication then potentially of seeing this type of situation and then another move down, potentially test the 370 area in the spiders. This is just a very difficult time, and the internals, this just volume is just giving me a lot of heartburn in terms of my own trading, because I really rely heavily on what volume is telling me, especially when you come into a key reference area, support or resistance area. It's going to be an interesting beginning to next week. It is the beginning of a new quarter and a new month. So what happens in the first couple days of next week could be very important, although it is the beginning of a 2-week holiday week. I know that a lot of people are off the week before Easter. A lot of people are off the week after Easter. So we may continue to see falling volume. It's going to be interesting to see what happens with price development. Watch short-term support levels, especially if you see volume increasing on any move to the downside. That would begin to eliminate this decline that we have here. That would then suggest more of an impulsive move that is forming to the downside. On the contrary, any increase in volume that would eliminate this to the upside as price develops higher would suggest that the market is in a very strong or building into a very strong uptrend. Have a great weekend. I'll pick this back up on Monday.